You have a bucket of cash that is sitting there tax-free that you can pull out before 59 and a half. If let's say that you get it started early and you've really built up the funds quickly, that could be a solution for somebody under 59 and a half to have some cash. Or if you're over that and you're using it as retirement income, there you go. You have a fund that has sat there and is different from your other taxable buckets. It's not taxable at all. Hey everybody, Matt McKay with Safeguard Insurance here. We're bringing a new series on life insurance, specifically IULs, and so I'm really excited to bring this to you. I know you may think life insurance may not be that exciting, but hey, I think it's great and it's really important and can really be a good tool, especially in the IUL mindset, especially. And so IUL, the first thing we want to talk about is basically what is it? You look it up on Google and there's a lot of different opinions and all kinds of things, but what is it really? So first of all, to understand what an IUL is, let's talk about the different kinds of life insurance. So on one hand, you have what's called term life insurance, okay? Term life insurance is something that lasts for a certain amount of time. Okay, kind of like it sounds. Term, so 5, 10, 15, 20, 25, 30. I've even seen 40-year terms. But it lasts for a certain amount of time, and then it goes up. It can be kind of the cheapest option usually, the lowest cost, if you want to make it sound a little less dinky. But basically, the idea is you get a large amount for not that much premium. However, there also is a pretty decent likelihood that the term will not pay out on you because it only lasts for a certain amount of time. If you're 30 years old and you get a 30-year term, what are the chances that you live past 60? Probably pretty decent. But also, if you have a $300,000 mortgage, getting a $300,000 whole life policy or 500 or a million or whatever may not be that realistic for you. So a term life insurance policy can be a great idea. On the other end is whole life insurance. And that, again, is designed to be exactly how it sounds. It's supposed to last your whole life. Basically, you pay the premiums, and it's going to be there, period. As long as you pay the premiums and don't take out a bunch of loans or something like that, the policy is going to be there until you're 121 or whatever age it runs to, and then they pay it out. Okay. But it's designed for your whole life, your entire life. That policy is going to be there, locked in premium, not going to go up on you. So the company knows, hey, this is something we're going to have to pay out on, period, as long as they pay the premium. So you know what happens? The price is a little higher because the company knows, hey, at some point we're going to have to pay this out if they take care of this policy. So whole life is a little bit on the more expensive side per $1,000 of coverage. In between that is the subject of this series, and that's universal life. Universal life is a mixture between the two. So we talked about how the term is low price, whole is high price, universal life is in between. It's also a permanent policy, so that means it will develop cash value. It is supposed to last your entire life. And it's really an interesting product, and it's been something that's been around for a while. But index universal life is something that's fairly new, and it's based on an index of the market. And so really, the index and the calculation and all that has to do with the cash value. Index universal life is interesting because it can really be used in a lot of different ways. Obviously, it's life insurance, so it provides a death benefit. So it can be a solution for people that just need a cheaper option to get permanent insurance. If you look at a pure whole life premium, it's going to be more. Well, if you're older, maybe index universal life could be the way to get some permanent insurance and you just take on a little bit of the risk and make sure that you take care of the policy and fund it. Index Universal Life is a really nice tool in that also it's designed really with cash value in mind. So whole life insurance is not going to develop that much cash value. Term doesn't generally have any cash value at all. And Universal Life is designed to develop a lot of cash value. So a lot of times it can be used when you put money into an Index Universal Life. It grows with interest as an index of the market. So say it's based on the S&P 500 or some kind of global index, or I don't know, BlackRock or whatever. One of the several indexes or mutual funds or whatever. But it's not tied into the market. They just use an index. So you get a percentage of whatever it's doing, or you get between 0.75 and 15%, or you get 120% of whatever the index does or whatever. And they put that into your cash value. So what Index Universal Life can do is, if you set it up with this in mind, you can actually overfund it, quote unquote, overfund the policy, and actually let it build up with excess cash value. So you put in some money, and when you look at your bucket down the road, it's got a lot more in the cash value than you ever put into the premium. It's protecting your death benefit, but it's also now got a nice bucket of cash that you can use to pull out and supplement a retirement, make a major purchase, whatever the case may be. And so you can use it in a lot of different ways. The interesting thing about Index Universal Life is, if you think about when you put your money into the 401k, right, it goes in pre-tax, right? No tax has been paid on that money at all, right? Well, when you take that money out, you're going to pay taxes on it, okay? And it's going to count as income for that year. So if you take out $100,000 to finish off paying your house, or to get a nice car or truck or RV or whatever, well, that money that you just pulled out of your retirement, your 401k, is taxable. So now you just made, if you did $100,000, you just added $100,000 to your tax burden for the year. Okay. If you have a universal life insurance policy that's done that, you can take out loans or systematic withdrawals. You want to make sure you set this up right and do it correctly, and that it's not a modified endowment contract. But as long as you take care of those things, you have a bucket of cash that is sitting there tax-free that you can pull out before 59 and a half. If, let's say that you get it started early and you've really built up the funds quickly, that could be a solution for somebody under 59 and a half to have some cash. Or if you're over that and you're using it as retirement income, there you go. You have a fund that has sat there and is different from your other taxable buckets. It's not taxable at all. And so it really can be a really nice piece that you can add to your portfolio. So just want to talk about what an IUL is, an Index Universal Life. And so hopefully that helps you a little bit. Hopefully it helps clarify some things that you've been trying to research. And I think it's a really valuable possibility in your portfolio. Ideal ages can be 35 to 60. And really, especially if you're healthy and you have money to spend, or maybe you've put in all your money and you've maxed out your 401k, you've maxed out your IRA, you've done all that stuff. You can't get a Roth, or maybe you can, or whatever, but you've used every other vehicle that you have. Well, you can put an unlimited amount of money into a life insurance as long as you're approved for the death benefit and your income justifies the need for the amount of death benefit that's attached to the policy that you buy. So if you want to put in $50,000 a year into an Index Universal Life Insurance, go for it as long as you can qualify. And so consider these options. A lot of people don't know. We actually had somebody come in recently that says, I want that life insurance that rich people get. And it's not, Index Universal Life is not just for quote unquote rich people. But what it does is, especially if you've got extra money that you want to put into life insurance, or you want some permanent insurance that has some flexibility, Index Universal Life can be a really nice vehicle, a nice piece that you can use to supplement some of your goals in life. So just wanted to bring that to you as episode one. Want to let you know what the heck it is, because we all see these things. There are 10,000 opinions on the internet. Well, this is a viable option. Make sure you consider it and reach out to us if you'd like to hear about it. God bless. Give us a like and a follow. We appreciate it. Thanks.